Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Nvidia surges past Microsoft to become the world's most valuable company. Global stocks rally with the S&P 500 hitting another fresh record, the 31st time this year. Fed officials are urging patience on rate cuts, with traders meanwhile betting on a Treasuries rally with 2 cuts priced in for this year. Plus, the White House repeatedly, reportedly cancels a high-level meeting with Israel, angry over Prime Minister Benjamin Netanyahu's claim that the U.S. is withholding arms. Well, it's just gone 8 a.m. across the Emirates. I'm Johanna Bersachi here in Dubai. We are back from a couple of days Eid, and we are coming back to a very strong market. S&P yet another record high, inching towards that 5,500 mark, as you can see, towards the close yesterday, up about 0.25 percentage points. And this, despite the fact that we had a weaker U.S. retail sales figure come through, broad weakness across all of these different sectors. But on the back of that, investors have started to price in the possibility of yet another rate cut this year. So we're now sitting at around 2 rate cuts priced in for all of 2024. That has catapulted the rest of these risky assets to new highs as well. Nasdaq, as you can see, also almost breaking through 20,000 as far as the index is the index was closing, but the futures you can see pointing to a very strong open once more. And of course, one stock that we're watching out for there is Nvidia. I'll get to that in a moment. US dollar also inching towards highs of the year as well. We are getting closer and closer to the 2024 highs as the market again comes around to this view that the US is going to continue to outperform economically, also in terms of the relatively more hawkish language coming out of the Fed. And then finally, Brent also in focus. We've broken through a key psychological level to the upside, $85, highs not seen since April. But I did mention Nvidia, and a huge development yesterday, because what we can see is Nvidia has actually now overtaken Microsoft and Apple as the most valuable company in the world. The stock is up almost 200% over the course of this year. Just a stunning rally if you take it back a couple of years. And for a long time, there was a massive gap between Nvidia and Microsoft and Apple. But just in the last couple of months, the rise has been quite spectacular. And now Nvidia is technically the most valuable company in the world, a sight to be seen, and really tells you about how much hype there is in the AI area this year and the last couple of months. Have been driving a lot of the gains in U.S. equities. But for now, let's bring in Bloomberg senior reporter for global equity markets, Jan Patrick Barnett, who joins us now. Maybe let's just start with the price action in Nvidia and the fact that the rally has been so pronounced, that so much so, it is now the most valuable company in the world.
Yeah, absolutely. And I guess that's not very surprising. It was like for many people just a question of when, not really if, because the hype, as you say, around AI and the money that is flowing into that area and let's say semiconductor stocks in general is unbroken. Every portfolio manager you speak out there is keen to get into the action. You have the retail money going in. You have all the analysts being very confident. And one has to be fair to say like that Nvidia is also delivering on its stock market performance, so to speak, given that the company is like showing us earnings that are like tremendously rising. The forecasts are still very good. The question is like, how long can this continue? But for the moment, there is a lot of fundamental. There's a lot of demand for their product, so it makes total sense that Nvidia is trading where it's trading.
And Jan, to what extent do you think that that's affecting the broader equity rally that we're witnessing? S&P, I started off the top of the show talking about how we're inching close to 5,500. I believe it's the 31st record high for this year. How does what's happening with Nvidia play into the broader index?
Yeah, that's a very interesting question, and there are two things to it. On the one hand, of course, we're seeing like a massive push to the big indices in the US, the Nasdaq as well as the S&P 500 being pushed to new record highs, because we have so many mega caps in those indices that have a very high weight in the index, and hence their performance has a strong influence on the benchmarks. On the contrary, if you look at measures like the regular index versus its equal weight counterpart, or if you look at other breadth measures such as like how many stocks are advancing and declining, or how many stocks do hit a 52-week high versus a 52-week low, you get a picture that is a little bit concerning, because like it feels like that the market concentration is very extreme. The equity market is basically split in half. There is Nvidia and a couple of others, and then there's everybody else. And everybody else is not doing that great as the benchmarks would would suggest. And for now, that's not a problem. But when you get these like massive concentrations in performance in the equity market, it always creates the risks. If something breaks or if something goes wrong and everybody wants out of this crowded trade at the same time, then you get these like 5, 6, 10% declines just like in a couple of days out of nowhere, simply because people are all on the same position, have all the same view. And if they have to reduce risks, then it creates wobbles in the equity market, which is not great. So for the moment, all perfectly fine, a big boost to the overall equity market. But I guess like if we want to continue that way and if we want to see more record highs, then I think we need a bit of a more broadening performance. And let's see what the second quarter earnings are not that far away. If we get a confirmation of the still like very nice and very bullish and very positive picture of corporate America, and that could certainly help to maybe lift the benchmarks even a little bit higher.
Yeah, and the question is whether Nvidia can keep climbing at this magnitude as well. We were just pulling up the chart, and it really has been a vertical ride over the last couple of months. Can it continue with that momentum is another big question. A senior reporter for global equity markets, Jan Patrick Barnett, thank you so much for joining us. Well, let's bring another voice, this time in FX. I'm happy to say that Siong Sim, FX strategist at Bank of Singapore, joins us. Mo, the other asset that I've been watching closely this morning is DXY. We're getting close to the highs of the year 2024. Is it just that U.S. exceptionalism is back again?
Well, I think it's both. I mean, it's not just a U.S. exceptionalism, although that exceptionalism was earlier undermined by improvement in the European economic picture. I think that still holds, but I think the dollar is also benefiting from political worries in Europe that has been weighing on the euro itself.
You talk about some of the political issues in Europe, and so de facto then what happens is the dollar becomes a safe haven currency. To what extent do you think the rally in the USD is underpinned by investors flying into quality?
Well, I think at this point in time I think there's some worries about what's happening in France and the political developments there, and that has a weigh on euro. But I think the backdrop here, if we step back a bit, we have seen the list of pockets of volatility getting longer and longer, and that's supporting dollar as a safe haven. So whenever volatility picks up, dollar as a safe haven currency tends to benefit. And we are getting some of that coming through, and that's helping to support the dollar. And of course, not to mention the fact that the Fed has been a supportive factor as well, given that the Fed has been advocating patience in terms of rate cuts. And we have been hearing the same consistent message from the Fed, in the last overnight as well, where it's saying that we'll be patient in terms of rate cuts, and that's supportive for the dollar.
Yeah. Let me ask you if you have a view on the euro here. We're obviously down about two big figures since those European parliamentary elections, since Macron called snap elections in France. So again, a lot of political premium being priced in. Do you think we've reached saturation points here? Because we sort of got to around 107 in the euro, but we haven't gone further.
Well, I think it's hard to tell. I mean, it all depends on what happens on 30th of June and 7th of July. I will need to see how that pans out. I think for now, it's safe to say that the market is, that worry will continue to linger until we get a result from the French parliamentary election itself. My worry is that the political uncertainty lingers, and that could narrow the scope for the dollar decline that we are expecting to happen when the Fed starts to cut rates in September, likely in September, followed by another rate cut in December.
We have, a multiple number of central bank meetings this week, but one on my radar is the Bank of England. Just taking a look at how cable's been trading for this year, mostly in sort of a 126, 127 range. It has been quite tight. But if you look at the performance of sterling versus euro, it has done really well. It's up about 3% versus the euro for some of the reasons that you were just citing. Do you have a view on how sterling should perform into and out of these UK elections? Is there a reason why investors are not pricing in more political premium over there?
Well, I think the picture is one of a contrast between UK and Europe, and that I think should support the sterling itself. I mean, the contrast is in terms of the political stability or the likelihood of political stability after the UK elections, in contrast to the political uncertainty that we are facing in Europe right now. And given the contrasting picture in terms of the political picture, that could continue to provide sterling support for the sterling against the euro itself. And plus the fact that I think the Bank of England has, is still in a prickly situation where inflation remains sticky, and they may have to hold rates longer as well, like in the US, and that could also support the sterling against provide support for sterling overall.
Yeah, well, there's an important UK CPI figure coming up today, so that's going to be high on investors' minds. I just want to wrap up the discussion with your views on yen here. We had the Bank of Japan meeting on Friday. I think some people were disappointed because we didn't get a lot of detail about the scaling back of bond purchases, hints perhaps at normalization, but it wasn't enough to support the yen.
Yeah, I guess, I think the market went into the meeting with a hawkish expectations, and that was disappointed. And it was disappointed somewhat because the Bank of Japan has, left the discussion to the July meeting, and we'll have to see what happens in July itself. For now, I think dollar yen's upside is being limited by intervention risk, and on the downside will have to wait for Fed rate cuts to come through, and that may only happen in September. So for now, I think dollar yen stays supported, but with the upside limited by intervention risk.
Yeah, but slowly still continues to creep higher. Mo, thank you for indulging me in my tour around the world of FX with you. That was Mo Siong Sim, the FX strategist at Bank of Singapore. Well, speaking of Asia and Bank of Japan, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio, and Avril, looks like there's a lot of green on these Asian markets as well.
Yeah, we're keeping a close watch on the Bank of Japan. Obviously, there's an inflation print out of the country at the end of the week. But I wanted to highlight what we're getting from the Chinese central bank as well, because the PBOC Governor Pang Gongsheng today saying that they are studying the implementation of government bond trading. Now, this is big news because this could be a way to allow two-way trading. And for context, the Chinese government bond market has been, seeing this bond buying frenzy, and that is despite PBOC warnings. They don't want speculation in the market. The governor has said this move is not the same as quantitative easing. We're seeing as the markets digest what they're hearing from the Chinese PBOC governor, a bit of fluctuation in Chinese government bonds. Let's flip the board, because as we look at what we're seeing on the PBOC, it's also worth noting that the Hang Seng, after really trying period, is actually recovering quite a bit of lost ground, and this is along with the rest of the tech counterparts in the Asia Pacific. Nvidia really putting the AI and the chip names in a good mood. Jumana.
Avril, thank you so much for that overview, and it is fair to say that Nvidia is putting all of these markets in a good mood. Well, still ahead on our show, Israel's military says it has a plan in place for an offensive against Hezbollah in Lebanon. We get analysis from consulting firm Control Risk later. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Well, the White House has reportedly cancelled a high-level meeting with Israel in response to Prime Minister Benjamin Netanyahu's claims that the U.S. is withholding weapons.
I said it's inconceivable that in the past few months, the administration has been withholding weapons and ammunition to Israel. During World War II, Churchill told the United States, give us the tools, we'll do the job. And I say, give us the tools and we'll finish the job a lot faster.
Axios reports the Biden team is, quote, angry and shocked by Netanyahu's statement. Now, Dana Khrish, our Dubai bureau chief, joins us. Let us just start with this, I would say, war of words going on between the U.S. and Israel. It's really interesting to see that this has actually come out into the open. Netanyahu accusing the U.S. of withholding weapons, White House denying those claims, now this report coming through of them canceling a meeting. Well, what is going on?
I mean, we saw Prime Minister Benjamin Netanyahu in that video saying it was inconceivable that that the U.S. was withholding weapons and ammunitions from Israel at a time like this. Now, this came as a surprise, I guess, to all of us, but particularly the U.S., who said that we don't know what he's talking about, and that the only ammunition shipment that they withheld was that large bombs that the U.S. had concerns over the fact that if they're being used in Rafah, and they would cause massive casualties. And we saw this reaction in the Axios report saying that the U.S. was very angry and they canceled this high-level meeting on Iran with Israel on Thursday. So this is yet another show of would we say, like, criticism against each other that is spilling out in public. And this isn't the first time that we saw the U.S. and Israel criticizing each other in public.
I mean, people always say that the only country in the world that has leverage over Israel right now is the United States. So it is very interesting from a political standpoint to see what is happening between the two countries and the increasingly fractious relationship. But this, at the same time as we are beginning to see an increasing amount of hostilities on the Lebanon border. We've spoken about that throughout the course of the week, and it really feels like the U.S. and France are trying to mediate to stop the situation from getting worse. What are the developments right now out of Lebanon?
So I would say the biggest sign that there is a major escalation and there is fear that this could turn into an all-out war is the visit by the U.S. envoy Amos Hochstein to Israel and Lebanon. He was in Lebanon yesterday. He met with several officials, including, of course, the House Speaker, who is Hezbollah's closest allies. And there wasn't a clear message, as we have seen, but he was saying that the time is serious and it's critical. We need to kind of get the hang of this. We need to control it, get it under control. Now, local media in Lebanon are saying that Hochstein didn't bring anything new per se, but he did say that we need to contain the situation. And there have been diplomatic efforts to maybe reach a compromise or a resolution on this disputed border between Lebanon and Israel. But while these have, I would say, failed to reach that compromise, the diplomatic efforts have been successful in maintaining the status quo, right? Keeping this cross-border fire within the so-called rules of engagement.
Yeah, I mean, I guess the question for Israel is whether they have the economic and political appetite to fight a war on two fronts if they do decide to go for this full offensive in Lebanon as well. But a big question for the region. Dana, thank you so much for explaining to us what's going on. Dana Khrish, our Dubai bureau chief. Now, also coming up on our show, Vladimir Putin gets a warm welcome to North Korea from Kim Jong-un. We get the details on what the two leaders are hoping to achieve next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetti in Dubai. Russian President Vladimir Putin has arrived for his first visit to North Korea in 24 years after praising Kim Jong-un's regime for its support of his war in Ukraine. Putin's trip comes after Kim traveled to Russia in September, and as satellite imagery later showed, there was a massive growth in arms transfers afterwards. John Herskovitz, our East Asia government editor, joins us now. John, really interesting to see the Russian president actually paying a visit in person to North Korea. Why is he doing this trip? What is he looking to achieve?
I think the one reason for the trip is to show gratitude for what North Korea has provided so far for Putin's war in Ukraine. And the U.S. and South Korea think that this trip is also to keep that support going. North Korea has supplied millions of rounds of artillery, ballistic missiles, according to the U.S. and South Korea, and this has helped Putin in his bombardment of Ukraine. North Korea has a lot of what Russia needs, and it probably still has more that Russia wants as it goes forward with its war in Ukraine.
I'm just curious to see what the reaction has been around the rest of the world. I mean, when one thinks of North Korea, you sort of think of this pariah state, heavily sanctioned. What has been the response out of the U.S., out of the West, to the fact that this meeting is taking place?
Well, the meeting itself is, that doesn't really cause concern. It's just what will grow out of the meeting, that we may see more of this arms cooperation. And the thing is, Russia and North Korea share a border. They have a train line that goes over the border. There are ports on North Korea's east side and Russia's far east, where ships have been seen traveling between those two places. They can stay in international waters, and the ships are suspected of carrying weapons from North Korea into Russia in exchange for goods that are helping Kim Jong-un. They're suspected to be commodities, food, which is helping him stabilize his economy. There could be technology transfers, or even more significant transfers of sophisticated weaponry that could increase the potency of his arsenal as he continues his ambition to develop a bigger and bigger nuclear arsenal.
Yep, hence why it's strategically important for Putin. All right, we're going to keep an eye on the latest and the announcements that come out from that trip. Thank you, John Herskovitz, our East Asia government editor. Now for a look at some of the other stories we're following. The U.S. budget deficit for this year is predicted to rise by 27% to almost $2 trillion, sounding a fresh alarm over an unprecedented trajectory for federal borrowing. New forecasts from the Congressional Budget Office are $400 million more than predicted in February, driven in part by additional spending for aid in Ukraine and student loan relief. The CBO also sees faster growth and higher inflation for the year. And Switzerland's banking regulator says HSBC's Swiss private bank has violated money laundering rules. FINMA says the bank failed to carry out adequate checks on 2 high-risk accounts without naming the individuals. It's ordered HSBC to conduct a review of all its current high-risk business relationships with politically exposed people. HSBC says it plans to appeal the decision. Well, we are going to be right back, and we're going to talk more about the geopolitics in the region after this break. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Nvidia surges past Microsoft to become the world's most valuable company. Global stocks rally with the S&P 500 hitting another fresh record, the 31st time this year. Fed officials are urging patience on rate cuts. Traders, meanwhile, are betting on a Treasuries rally with 2 cuts priced in for this year. Plus, the White House reportedly cancels a high-level meeting with Israel, angry over Prime Minister Benjamin Netanyahu's claim that the U.S. is withholding arms. It's just gone 8:30 a.m. across the Emirates. Good morning, everybody. We are back from the Eid. I am Jumana Bersachi in Dubai. Let's get you caught up on how some of these markets are faring. As we said in the headlines, S&P yet another record high for this year, the 31st time in 2024. So it does speak to, again, all of the optimism surrounding AI. One stock in focus, that is Nvidia, has broken through to become the most valuable company in the world, overtaking Microsoft yesterday. We will show a terminal chart about that in a moment. But as you can see from the boards behind me, S&P 500 inching closer to 5,500. NASDAQ futures also pointing towards another positive start to the day as well. The USD also in focus continues to creep higher as well, getting close to the highs of 2024. This despite the fact that traders have started to price in 2 cuts now by the end of this year, about 48 basis points of rate cuts now priced in out of the Fed. But as we spoke about earlier on the show, the U.S. is benefiting from a safe haven bid. And then Brent through $85, so completely erased some of that, the losses we saw post the OPEC Plus announcement a couple of weeks ago. And then here it is, Nvidia, the stock stock du jour, the stock of the year. It is, as you can see, overtaken Microsoft and Apple to become the most valuable company in the world. A lot of hype around AI, around tech stocks, and what this has meant for the broader rally as a whole. And as we've been speaking about again on the show, it has been a very concentrated rally. There are just a handful of stocks that have been driving the performance in the S&P. The question is, can this momentum continue? It feels like in the short term, it can. But for now, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Is there green on the board in Asia as well, Avril?
Yeah, there's green among these tech names, but let's talk about what we're seeing in government bonds as well, because the PBOC governor, I think, stole the show a little bit today in terms of news flow when he said that along with the finance ministry, they're going to be studying the implementation of government bond trading. So both the buying and selling of government bonds. We have the likes of Mizuho saying that the PBOC isn't considering quantitative easing. This is more a step to replenish liquidity. It's about addressing the liquidity issues in the market. So we're seeing yields in China fluctuating for much of today, especially after the PBOC governor was speaking. Let's flip the board and take you to Japan as well, because of course the central bank there is another one that's a big participant in the bond markets. We are digesting the minutes from the BOJ's April meeting where we got a bit of a hawkish signal from at least one board member. That doesn't seem to be moving the needle very much on the yen, but we are also hearing that the BOJ Japan is considering issuing bonds with shorter maturity. So something else for market participants to consider on a day where, as I said, the green is coming through for a lot of these tech names that are helping the Nikkei to, well, it's erasing some of the earlier climb, but still quite well in the green for now. Jumana.
Excellent. Avril, thank you so much for the overview. That was Avril Hong in Singapore. Well, the White House has reportedly cancelled a high-level U.S.-Israel meeting on Iran that was scheduled to take place tomorrow. That is after Israeli Prime Minister Benjamin Netanyahu released a video on Tuesday claiming the U.S. was withholding military aid. This comes as Israel's military says it has approved operational plans for an offensive in Lebanon as fears of an all-out war between Israel and Hezbollah continue to grow. Hezbollah has traded fire with Israel almost daily since October the 7th. Now, the U.S. envoy Amos Hochstein has traveled to the Middle East in a bid to try and ease tensions between Israel and the Lebanese group. Israel is demanding that Hezbollah withdraw northward away from the border, but the group says it won't negotiate before a ceasefire in Gaza is reached. So a lot of news to digest over the last couple of days. Let's bring in Niamh McBurney, Control Risk Middle East Associate Director. Let me just start with this growing wedge between the U.S. and Israel that has become a lot more apparent in the last 24 hours. What do you make of the relationship right now between President Biden and Prime Minister Netanyahu?
Well, it reinforces our view that things have been getting a lot worse. However, they're not as bad as they have been in the past. We're not in 1982 Reagan territory, when Israel invaded Lebanon. So although things look pretty bad and are getting worse, that they're not at that low.
So Netanyahu is accusing the U.S. of withholding weapons. We heard from the White House overnight saying that they don't know where those allegations came from. There was one quite high-profile pausing of shipments before the Rafah offensive, but the White House seemed to suggest that there hasn't been anything since then that would prompt Netanyahu to make those comments. What sort of bearings do you think this is going to have on the war in Gaza?
Materially, not any. Really, this is about the political relationship between the two. It reinforces the lack of leverage that the White House has with this Netanyahu administration, even as it's literally changing in the last couple of days. You know, the war cabinet has been dissolved. We're now going to have a series of mini groupings that will help decide political policy to align with the military policy that the IDF is coming up with. So all of this is really much more political than it is military. The conflict is going to continue. We expect that. A number of brigades have very focused aims and goals that they've been given by the IDF leadership, and some of those brigades have been saying that they will be looking to complete those aims within the next month or so. So that shows us that there is a bit of a timeline here, but no immediate imminent end to Rafah.
You mentioned the war cabinet. How significant is it that this war cabinet has now been dissolved? Does it matter?
It does. It means that Israeli politics, and particularly the key decision-making bodies, are more split than they ever have been. But what Netanyahu is trying to do is to avoid boxing himself in. What he doesn't want to find is that he brings in Smotrich and Ben-Gvir into a new war cabinet that forces him to move even further to the right on political and military decisions than the state is already enacting, and potentially force his hand on Lebanon.
Well, I was going to ask you about Lebanon because there are reports overnight from the IDF saying that the operational plans for an offensive in Lebanon have now been approved by the chief officer of its northern command. This is quite worrying, especially if you're sitting close to both of those borders. What is the likelihood, do you think, of Israel actually going for another offensive on its northern border?
So the decision itself shows that the IDF is preparing to take action, but it hasn't decided to take that action yet. So it is concerning, but it doesn't reflect an imminent change in the status of the northern border. But what it does say is that the IDF are now looking very firmly towards what the future of post-Gaza operations look like, and should they engage a second front, but not doing those two things simultaneously.
Well, what do you think would be the catalyst, though, for things to really escalate? Because so far we've been talking about there's been a daily exchange of fire on the Lebanon border, Lebanon-Israel border, but you could say that both sides have sort of kept to the rules of engagement, sticking to military targets for the time being.
Yes.
What do you think would take it one step further?
I think it would be primarily a decision by either side to move ahead with this, irregardless of any other triggers, because certainly for the IDF, the status quo is not sustainable, and so they do want to take action. But any potential triggers could be, for example, a particularly high casualty count from an IDF attack on Hezbollah or some of the Palestinian-affiliated groups that operate in southern Lebanon, that, for example, Hezbollah's central leadership decides that, and Hassan Nasrallah decides it is no longer tenable and that they have to go big, as it were.
What do you think would happen on the Lebanon border should a ceasefire in Gaza be agreed to?
I think at that point the IDF would likely take a decision to cross the border.
You think that, okay, so interesting. So even if there is a ceasefire in Gaza, IDF would then look to escalate on another front?
I think there is potential for that. They've been signalling for months now that insecurity on the northern border is absolutely untenable for them from a security perspective and increasingly from a political perspective. So although a war between Israel and Lebanon is not imminent at all, it is certainly going increasingly likely.
Yeah. All right. Something to watch out for. Niamh, thank you very much for joining me today on the show. That was Niamh McBurney, Control Risk Middle East Associate Director. Now for a look at some of the other stories we're following today. The Biden administration is sending an envoy to Japan and the Netherlands seeking greater cooperation in limiting China's AI chip ambitions. Bloomberg understands the Dutch and Japanese governments have been resisting U.S. pressure as they want more time to evaluate the impact of current export bans. The U.S. delegation's visit to the Netherlands is expected after a new Dutch cabinet is sworn in the first week of July. And Boeing CEO Dave Calhoun has faced severe criticism at a Senate hearing focused on the aircraft maker's safety record. It was his first public appearance before Congress since taking over at Boeing in early 2020. Senator Richard Blumenthal accused Boeing of focusing on profitability ahead of safety.
You and your board of directors have a duty to your shareholders, but they will be deeply ill-served if you fail to correct course to confront the root cause of this broken safety culture.
And coming up, the Ghana Stock Exchange is looking to lure Nigerian pension funds. We hear from the bourse's managing director on what they are hoping to achieve after the break. This is Bloomberg.
There are some really good companies that have growth plans and need capital, and government has understood the need to have Ghanaian ownership or the Ghanaian public ownership in some of these companies.
Does the election in December potentially put these plans to the side, or are you hoping maybe they can come to fruition before we get to the election?
whichever government we've seen in power has always supported the exchange, and we've seen companies, SOEs, come to the market regardless of which government is in power. So we do not believe that this deters an election or will deter this process. Ours is to keep working with them to do that. But on the corporate side, what we are seeing is that the corporates are asking for incentives. Tax incentives, we've seen that as an important enabler in other markets to create a differential, to make our markets attractive for corporates to come through this very difficult corporate governance processes we take companies through.
Right.
And that has been a way to bring more corporates on. So that's an area we're also engaging with the policymakers for the right tax framework that will bring more companies to the market.
I know you're speaking with a number of other exchanges from across the continent while you're here in South Africa. Are you taking cues from any of them? I mean, the JSE, we obviously have the Nigerian Stock Exchange. Are there those incentives that they're maybe doing that you're looking to bring into the JSE?
Absolutely, and it's Africa and global. So Jamaica, Istanbul, here in Africa, we're seeing the same push. Kenya just announced 7 SOEs coming to the market. And so these are all very important tools or incentives to get the private sector to the market.
Well, that was Abena Amoah, the managing director of the Ghana Stock Exchange, speaking to our Africa correspondent Jennifer Zabazaja in Johannesburg. And also coming up, more private equity investment comes to the Gulf. We'll have the details on Brookfield Asset Management's latest foray into the region next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Well, South Africa's stock benchmark has rallied the most this year on Tuesday, suggesting investors are turning positive on the nation's equities. The gains come with Cyril Ramaphosa to be inaugurated again as president later today. He was re-elected after the African National Congress agreed on a government alliance with other parties. Bloomberg's Africa correspondent Jennifer Zabazaja joined us now from Johannesburg for more back in Johannesburg. And Jen, maybe just let's start off, if you could, by giving us an overview of what this new government actually looks like.
Right, Jumana, I think investors are really paying attention closely to what we'll hear from the president today during the inauguration. But then, of course, the key focus is going to be what the cabinet looks like, right? And of course, we've talked about how this is the first time in 30 years that the ANC, the previously ruling ANC, lost its majority. And so we're likely to see some of the top positions then being shared by some other parties, namely the Democratic Alliance, which many people call pro-business, somewhat centrist, and also potentially the IFP, which is another party that the investors were likely more bullish and supportive of going into this election. And so the key focus will be, what does the cabinet look like? There's been some discussions about potentially the ANC giving up defense positions, potentially international relation positions, and of course, most importantly, maybe economic positions and how that affects the economic trajectory of the economy, and the continuity that we have seen from the previous administration is going to be of key focus. And so we'll wait to hear from him after his inauguration.
And let's talk about the market impact, because there was a lot of concern going into and out of the elections about what this new government would look like, the potential to partner up with some not market-friendly parties. That doesn't appear to be the case. So what are investors saying about this new government?
Exactly. You know, we got a note on Tuesday, Jumana, from S&P Global Ratings Agency, and they're saying that this outcome is broadly favorable, especially when we look at the economic and the fiscal policy implications of this outcome. Now, of course, as I mentioned, we still don't know what the cabinet is going to look like. But if you take a look at just market reaction since we saw Ramaphosa reelected on Friday, that is an indication potentially of investor sentiment changing, of course, post-election. So you mentioned the Johannesburg Stock Exchange. It was actually the best performing emerging market stock index on Tuesday, tracked, and that's compared to 90 plus other benchmark indexes that we're tracking here on Bloomberg. We're also seeing the rand really strengthening, which we hadn't seen prior to the election. We're also seeing South African local bonds doing quite well. And so, you know, really what it's looking like is investors are definitely feeling a little bit more optimistic about what the potential implications are of this new government of national unity. But what will be key to this strengthening continuing for something like the rand and also for local stocks is the policy continuity and also reforms being accelerated from what we saw from the previous administration.
Yeah, all big questions for the investment community. Jen, thank you so much for bringing us the latest out of South Africa. Jennifer Zabazaja, Bloomberg's Africa correspondent. Well, Brookfield Asset Management is expanding on its investment in the Gulf region, this time into education. The investment firm is leading a consortium buying into GEMS Education, one of the world's largest private education providers. And while financial details have not been disclosed, Bloomberg has previously reported that the Canadian firm was looking to invest around $2 billion, making the transaction one of the biggest private equity deals in a closely held business in the Gulf. Well, for more details, very happy to say that Bloomberg's finance reporter Nicholas Parisi joins me. I know that you've been reporting on this story for a very long time now, and it looks as though the founder was trying to orchestrate a sale around the time of the pandemic, obviously to no success. But here we are today. So how did we get to this point? Yeah,
it's finally did. Talk about a sale started in 2019 where they were pursuing a London listing. That didn't happen for several reasons. Later on in 2022, then a proper sale process started. Initially, it was a consortium from Abu Dhabi that looked like the most likely takeover candidate. But in recent months, Brookfield emerged, not an unknown player, obviously, in this region. And as you said, we previously reported that they and the consortium are committing about $2 billion to this deal. In addition, and that as little notice maybe in the release, the company is also secured a financing package that's likely in the billions. So for this region, it's a sizable deal. Yes.
I know we don't have a lot of the details around this, but I'm curious to see, why Brookfield see this as such an attractive opportunity, because it's occurring at the same time, and you've written in your report that other private equity are using this as an opportunity to exit. So CVC is exiting and Brookfield is coming in. It's just interesting changing of the guard.
I think Brookfield has shown that it's committed to this region. They've made several deals in the last few years alone, including a JV with Meraz, which is a government entity. Then you also have GII, which is Gulf Islamic Investments, with which they also did deal. So they like this partnership model. They're clearly bullish on Dubai. And then you have a company like GEMS, whose rise mirrors Dubai. So if Dubai is doing well, GEMS will be doing well. And you can see that in today's numbers. It's almost 140,000 students enrolled at the company. So it's a big company. It's a well-known company. So I think it is right up Brookfield's alley.
Yeah, and let me just ask you, more broadly, I know you've been tracking the flow of money into and outside the region, but from private equity standpoint, how is the deal flow this year comparing to, say, prior years in the run-up to 2024?
Well, I think that's what makes this deal so important, because before a lot of the private equity funds came to this region to extract money from it, they were raising money. So if you see the Brookfields of this world now actually committing money, then that's a good sign, something that governments will be proud of. And also part of the deal, the previous PE owner, CVC, is paring down its stake, but immediately said that they will continue to invest. So I think we look forward to more PE activity here.
Yeah, I mean, the difference is in this situation, they're coming to the region to acquire assets. They're not coming here to get LPs. Yeah. Nicholas. Thank you so much for that story. And you can read more of the story as ever on the terminal. That was Bloomberg finance reporter Nicholas Parisi. All right, quick look at markets because, we are back from a couple of days Eid, but equity markets continue to move from strength to strength. S&P futures breaking through 5,500. The actual index closed below 5,500, but we're basically almost there. Lots of positive momentum in these equities. At NASDAQ also, you can see inching towards the green as well. Very strong session yesterday, led by one stock only, that is Nvidia. It has overtaken Microsoft now to become the most valuable company in the world. Bear in mind, we had some weaker U.S. data that came through yesterday, retail sales, but what that did is it allowed traders to start pricing in more and more rate cuts for this year. So we now have 2 rate cuts priced in by the end of 2024. This is a chart of Nvidia. I just spoke about it, overtaking Microsoft and Apple to become the biggest by market cap. It's up more than 150% over the course of this year, but vertical move higher, as you can see. Switching back as well, I just want to draw your attention to oil. And we have been monitoring the price of energy very closely since that OPEC Plus meeting. Brent now through $85. So in line with the other risk-on sentiment that's capturing other markets, equity markets, Brent also beginning to climb. As we head into the European session, we're going to keep an eye on some of those French assets as well, which have started to stabilize. But that is it for our show. That was Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Stay with us for Daybreak Europe. I will be hosting that as well. This is Bloomberg.